Hey everyone, Andy Moss here, tradingadventures.com. Good morning, good afternoon, whatever the case may be, wherever you are. A quick hello and thank you to all of you paid subscribers, new and old. I appreciate all of you being here. I know it's been a little bit quiet the last week or so, and that's because, from a kind of a swing trade and longer perspective, there really hasn't been much to do in the market as we see how this correction resolves. So I do think we've got a few things to look out for this coming week. So I wanted to share just kind of off the top of my head some thoughts and some of the things that I'm looking for. So this is not scripted. I don't have a big pile of notes to go through, so bear with me as we just kind of run through quickly some things that are on my mind and some things that I think we need to pay attention to in the week ahead. It will be the first full week of trading for 2025. We've had holidays. We've had the Jimmy Carter Day of Remembrance or mourning. And so this week it'll be busy. We've got 5 full days. We've got CPI, we've got PPI, we've got earnings season officially kicking off with many of the banks reporting starting Wednesday. So there should be some action and maybe some things to do. So let's jump in here and look first at the roadmap. On a shorter term basis, this is what I call the roadmap. I share this on X about every morning, and these are 65-minute candles on the 4 major stock indices. And what I want to look at is where is the 5-day simple moving average, where is a week-to-date anchored VWAP. We have the year-to-date anchored VWAP on these charts. That's the pink lines. And then we have various VWAPs that I place manually, anchored VWAPs that I place manually either from a pivot high or low or a significant event or that kind of thing. Those are usually in orange. And the orange line on these charts is the VWAP anchored to the Fed announcement back on December 18th. That was a day that really sent the markets lower as we started to get the idea that maybe we're not going to see as many interest rate cuts as previously thought. So that has taken an effect, and certainly something that has kind of been a lid on prices through that time. Not precisely, not exactly, but it is. We've been under that line almost completely for the last couple of weeks on the SPY, Qs, the IWM, and the DIA. To look at this same chart, because sometime I post both, in the futures markets, again, same thing, only these are 1-hour candles. The reason for the 65-minute candles on the ETFs is because that breaks the trading day into equal segments. Futures start and end on the hour, so hourly candles give us the equal time frames there. And again, same thing. Blue line is the 5-day moving averages. We've got week-to-date anchored VWAPs in the purple line. That'll be starting new tomorrow evening when the futures market opens for trading for the coming week, and then the orange anchored VWAP from the Fed. So just wanted to give you the kind of the compare and contrast of those two different charts, since I do post both kind of interchangeably. So what do we see? Prices are 4 for 4 below the flat to declining 5-day moving averages. So this is no surprise if you are also a reader of Brian Shannon, Alpha Trends. This is directly out of his anchored VWAP playbook. This is not a new concept, not something that I invented. This is straight out of his book. I learned it from him, and I find it very, very useful. And as he says, below a declining 5-day moving average, stocks are guilty until proven innocent. So that's what we're looking at here. We do have, we could put a couple of pivots in here. It's the prices have kind of been dancing around the lows, and I'll go to the daily and weekly charts here in just a second to show that. So it's not a full-on crash as we've been having this, kind of back and forth, really pretty choppy and erratic action in all 4 of the indices here. So let's go over to the daily chart and take a look at what we might want to expect there. If you've been following along and reading the recent articles, you know we've been watching for the sequence of lower lows followed by lower highs. So that started here on the daily chart. We had this low exceeded this previous low. Then we made a little bit of a short-term high here that was lower, and so on and so forth. The pattern is playing back. That is the definition of a trend. A downtrend is a series of lower lows and lower highs. Of course, an uptrend is the opposite. So Friday's candle, we have a lower low. The pivot low on SPY came down into 578.55 before we got a bounce. There was a pretty significant intraday bounce that then we kind of gave it up and didn't close quite on the lows. But I'll show you that in just a second. But we did close about on the 100-day moving average. So closing price 580.49. 100-day moving average in green here is the 580.56. So, you know, kind of makes sense that we found a little bit of support there. Will that be final support? Will that be the ultimate support? Is that the bottom? It could be. I don't feel like it will be. That is a feel. That is not a technical analysis opinion. That's just, I kind of feel like maybe we go a little lower down into this VWAP anchored from the August lows. This was the pivot low, Yen-mageddon, whatever you want to call that event. That is what happened back in August, and so the anchored VWAP from that level has been following the price up along here. I wouldn't be surprised if we see a bit of a flush or a whoosh, not a crash, but a few more points lower from the 580s down into the lower 570s. Maybe we test this area, and then maybe it's a turnaround Tuesday. Maybe it's Wednesday with earnings and PPI. Now, who knows what the catalyst could be? But towards the second part of the week, it wouldn't surprise me to see a rally back up into maybe this 585 pivot, 586 area. The 8 and 21-day moving averages will be catching down into this level. We called this pretty correctly here. This bounce led to the test of the short-term moving averages, the 8 and 21. Actually got all the way up to this pivot before finding ultimate resistance and coming back lower. I think we could probably do that again. Again, I don't know. That's not a prediction. It's not pure technical analysis. It's just kind of a feel of what I think might happen. That's one of the scenarios that I'm going to be looking for, and so keep an eye out for that on maybe a trade lower on Monday, followed by some recovery either starting Tuesday or later in the week. Over in the Qs, same thing. We held this area, this 503 to 505 pivot area, and got a little bit of a bounce, and it is a hammer here. So we could, from a pure technical analysis point of view, the possibility exists that we maybe we get a Monday open above this hammer confirming a reversal, and we're all of a sudden we're headed back towards the 520s and the 530s. That is certainly a possibility. I don't think that's going to happen. I think the more likely scenario is again, maybe a whoosh down into this, or a little bit of a whoosh might be a bad term. A continued sell-off, maybe down into this 100-day moving average area here at that's just under 497, and then that same anchored VWAP from the August lows is for the Qs is down here just under 490. So that's not too far away if we consider where we are off the highs. At the low on Friday, we're 6.5% off the highs. Okay, down to the 100-day would have us down about 8%. This VWAP would be a little over 9%, and a trip all the way to the 200-day moving average would be about an 11.5% decline. We know the media and the financial reporters love to call a 10% sell-off a correction. So, does that become a self-fulfilling prophecy and we see that 10% decline? Who knows? We've already seen it in IWM. Diamonds, DIA, the Dow is down a little more than SPYs and Qs. Maybe they catch up. I don't know. We'd have to get to the 200-day moving average or beyond to qualify for that supposed 10% correction definition. So I don't know that we go that far, but I wouldn't, who knows how the rest of the month and the quarter shakes out. The first quarter of the year following an election is typically not a great quarter, seasonally speaking. So, most of the gains it happen later on in a post-election year. So, seasonality has been a pretty good guide for the last year or more, and so I think we need to pay attention to it. Certainly doesn't predict what's going to happen, but it can give us a framework to keep in mind. So let's look for that. That Monday, Tuesday kind of sell off, if we get it, could take us down into, again, this is 497 to 490s on the Qs. Going over here to add the 30-minute chart so we can see. This was the bounce on Friday. So you can, here's noon Friday. It's really a pretty prominent bounce before it came back and gave about half of that up into the close. So the buyers are not gone. There are people that want to buy dips. We maybe want to be some of those. Is the lower the indices go, the more attractive the dip buying opportunities become. So in the inner circle, we've had some really good trades this week, taking advantage of some of this volatility, but they've been quick. We've been nimble. We've been trading around positions. It's not been the kind of thing where we said, all right, let's really size up and settle in for a bigger, longer, more sustained move. As we get lower, as we get more near that 10% correction level, those kinds of things will get more attractive. For now, again, the dip and bounce scenario for next week, I think, needs to be treated with caution and with a full awareness that could, doesn't mean we've seen the absolute bottom of this run. Maybe we do, maybe we don't, but we need to be prepared for both scenarios. This week, or this past week, we had these potential resistance areas mapped out, and I've moved this this yellow circle over to make it more readable. But back in this area, it really worked, pretty well, pretty closely in line with how we had drawn it up. This is the circle still in the way here on SPYs, but you can see this is the pink line. Again, year-to-date anchored VWAP. The blue line is the 5-day moving average. We've got this is the, let's see, I can't remember what this VWAP is from here. Let's go look at that. Oh, that's the Fed day anchored VWAP. And then finally the week-to-date. All of that resistance to keep prices from getting much higher and moving lower there. So, even if we get that bounce, these levels will all be down near or under this 586 pivot level. So a bounce back down into here would very likely find at least some short-term resistance at this pivot area, with these indicators moving down closer to that level. So then from whatever happens from there, we'll have to take it one step at a time and see how it develops. So we talked about the indices. We've talked about the roadmap. We haven't talked about Bitcoin or many individual names. I did post a pretty good overview of the Bitcoin breakout on my weekly chart thread on X this morning. If you haven't seen that, please go look it up. I will include a link below this video so you can check that out, or it's in your inbox from earlier when I sent the message out with the link, as I do each Saturday morning. Have a look at that. I do want to, let's just go quickly. I'll have more individual names coming as opportunities show up and as we continue to work through the lists. Coming up this week, maybe tomorrow evening or Monday morning, we'll get some ideas flowing there. And again, just to recap, the intention here is just to give you a little deeper view of what I do in the free market updates on Monday and Thursday, and then the weekly chart thread on Saturday. I just want to get you a little closer to the action, a little more under the surface. If you want to have more specific trade ideas, come check out the Epic Trades Options newsletter service. That's a great tool for your trading if you are looking at options and that kind of thing. Or come visit us in the inner circle and see that's where you can really have just constant contact all day long. Get a feel for what David and the gang is doing in there. I'll be in there posting some charts and adding some comments as well, and that's where you can really get the full experience of of how we navigate the markets and where the opportunities are coming from in real time. So the links are down below. Check those out if you haven't already. But looking at NVIDIA, failed breakout here on the this was on Monday with Jensen Huang's keynote speech opener for the Consumer Electronics show. It was a classic sell the news event. It's not because anybody hates the company or the stock necessarily. It was just a sell the news event. We got up, made new highs, and sold off sharply to come back down here. So now we're looking at this pivot area, which has been very important. Got a lot of price memory around this area. The 100-day moving average all around $132, as well as this this bit of a trend line here dating back to that August low. Low 130s should be a pretty good support level for NVIDIA. Now that sets up well with the idea if the SPYs and Qs want to dip a little further before having a recovery later on in the week, that should play pretty well in there. So things like that that kind of gives you a feel for, those are the types of plays I think we have the best likelihood of seeing this coming week. So there'll be other names. They're probably going to be setups that look pretty similar to that. So to go back to Epic Trades real quick, if any of you are our newsletter subscribers, I did want to just quickly go over. We had Carvana puts that we sent an alert earlier this week. And because Carvana just looks, this chart is not behaving well. It's now below all of the key moving averages except for the 200-day. It did come down and find some support at this pivot level. Came back up to the anchored VWAP and found some resistance and then heading lower again. So why did we sell the puts? We made the decision to take an early small profit on the position because we had the February, I think it was the February 17 170s. And the stock was doing the right thing, but the puts were not moving as well as we felt like they should. And so the concern was that if the stock bounces at all, the puts are going to be back underwater from where we bought them. So we wanted to go ahead. We booked a small profit, 10 or 15%, something like that, and closed the position. So still think the stock could probably go lower. I know there's a lot of folks in the room that are still short the stock, or at least a few. And a retest of this 176 area probably is pretty likely, but options add a layer of complexity. While there are lots of benefits there in the ability to get some outsized percentage moves and manage risk precisely. The timing is a factor and the magnitude of the move is a factor. So that's why we made that decision to close that position. We will look again. I don't know that it'll be another short-oriented Carvana position, but just want to give you a little more behind the scenes about how and why that decision was made. We'll see what else comes up. And Bitcoin, as we just before I leave you, checking in real-time view on Bitcoin here as it is down just a little bit from yesterday's closing price. We still have the moving averages 821 and 50 overhead here, and this anchored VWAP from the November pivot low just will not give up. It's provided a lot of support. What do we know about multiple tests of support and resistance? The more time a level is tested, the more likely it is to finally break and give way. So, not an incredibly bullish picture for Bitcoin here on the short term, but, it's held up so far. And the longer term picture still looks very bullish and holds up pretty well. So we'll keep watching this pretty closely and kind of taking it slow, waiting for some better feel for a more sustained upward move there. Each of these have been kind of giving up the ghost there pretty quickly. So we'll stay tuned, see how it develops. I will have more coming to all of you later on in the weekend and early next week. I hope you have a great rest of your weekend. Again, thank you for being here. All of you that have been here from the beginning, I really appreciate you. All of you that are new today and in the last few days, I'm ecstatic. I'm glad to have you here. Thanks for coming by. I'm interested. I'm going to put a poll up underneath. I send these updates out on an as-needed basis. I am interested in your opinion and your feedback. How often would you like to see more in-depth chart analysis and market updates like this? Should it be, some people do every day after the market close. Some people do every day before the market opens. Some people do both. I'm not saying I have time and capacity to do that, but is it? I put out the free articles every Monday and Thursday on a normal schedule. That's that's a standard deadline that I've been publishing with for years now. I do consider, do we need to have something? Would you enjoy getting something on a regularly scheduled basis, no matter what's going on in the market? So, let me know. For now, we'll keep going as needed. That gives me the freedom and flexibility to point out only the things that are most important, that I think are most important. If you'd like to see more, I'm willing to hear that. If you'd like to see less, that's fine too. I'm going to put a poll up there. Feel free to share your thoughts with me. Send me a message, leave a comment, and we will keep developing this together. Hope you have a great weekend. Talk to you soon. Bye-bye.